The trade relationship between the United States and China is complicated. For years, the United States and China have been important economic partners, relying on each other's supply chains for input into goods and services consumed within their respective borders. However, in 2018, President Trump initiated the trade war to put pressure on China to make fundamental changes to its economic system, which has resulted in economic misery on both sides.
We've lost 60,000 factories, 6 million jobs at least, gone. But we have a trade deficit, depending on the way you calculate, of $504 billion. We have a tremendous intellectual property theft situation going on, in particular with China. We're going to be doing a Section 301 trade action. It could be about $60 billion.
This makes us question, is it possible for U.S. to stop trading with China? Join us today in our discussion on the China-U.S. trade relationship. We will also be talking about the China-U.S. debts, as well as Chinese investments in different sectors of the United States. So, let's start from the beginning. There was essentially no trade between the two countries for the first 30 years after the People's Republic of China was established in 1949. Later, under Deng Xiaoping's guidance, China began a decades-long process of economic reform in the late 1970s. And after normalizing its relations in 1979, trade between the United States and China exploded from a few $billion to hundreds of billions of dollars annually over the next 4 decades. Now, China is among the top and fastest-growing importers of the United States. So, what does the United States depend on China for? The United States is strongly reliant on China for the low-cost commodities that help low-income Americans make ends meet. It also relies on China to fund its own exports. China is its third-largest export market after Mexico and Canada. The United States imports commodities from China in over 100 distinct categories. Cell phones, computers, and clothing are the most popular imports. In 2020, imports of cell phones and related household items were estimated to be valued at $61.8 billion. Moreover, the United States is also dependent on China due to fundamental flaw in the American economy structure, a severe and concerning shortage of local savings. The net domestic saving rate was merely 1.3% of national income in the fourth quarter of 2017. So, it's kind of impossible for the United States to stop its trade with China as it depends on its imports, quite literally. China is currently the top goods trading partner with the United States. Despite political unrest, China-U.S. trade increased by 8% in the first 9 months of 2022. In November 2022, the total value of the U.S. trade in goods with China amounted to about $52.46 billion. While in 2021, U.S. exports to China were $151.1 billion. U.S. imports from China were $506.4 billion, and the trade deficit with China was $355.3 billion, a 14.5%, $45 billion increase from $310.3 billion in 2020. Interestingly, in 2022, China dominates U.S. exports of immunological drugs, plasma, and vaccines. China provides 97% of all antibiotics and 80% of all active chemicals used in American medications. According to a report, the United States imported $4.6 billion worth of food from the People's Republic of China alone in 2017. So, according to these facts and figures, it may seem that the China-U.S. trade is more beneficial for the Chinese economy. However, it is a win-win situation for both the countries. The benefits of trade with the United States and the rest of the world have been enormous for China. China's economy has increased almost 5-fold since 2001 to become the world's second-largest economy, trailing only the United States. Hundreds of millions of people have left extreme poverty as a result of this growth. The Nature Index considers joint research between the two countries to be the most academically fertile in the world. Between 2015 and 2019, scientific collaboration between the United States and China increased by more than 10% per year on average. Despite the global expansion of COVID-19, experts from the United States and China collaborated more in the last 2 years than in the prior 5 years combined. Over 100 co-authored articles in top scientific journals and frequent collaborative appearances in science-focused workshops and webinars have resulted as a result of this collaboration. Over the previous few decades, China has steadily increased its holdings of U.S. Treasury securities. The Asian nation owns $1.065 trillion, or 3.68% of the $28.9 trillion U.S. national debt, more than any other foreign entity except Japan as of October 2021. Now, you must be thinking, why China buys U.S. debt with Treasury? In international commerce, the U.S. dollar is widely accepted and frequently used as it is the world's most convertible and traded currency. In fact, oil and gas are priced and exchanged in the U.S. dollars. Moreover, U.S. debt provides the safest haven for Chinese forex reserves, effectively implying that China extends loans to the United States in order for the latter to continue purchasing Chinese commodities. As a result, as long as China's economy is export-driven and it has a large trade surplus with the United States, it will continue to accumulate dollars and debt in the United States. Moreover, both countries benefit from it as China gains access to a large market for its goods, while the United States benefits from Chinese goods' low pricing. And if China starts dumping U.S. debt, it might cause a sell-off in the bond market, raising interest rates in the United States and potentially stifling economic development. Now, there is one interesting thing that I want to highlight, which is China is buying U.S. land. One of the greatest categories of international buyers of residential property in the United States is Chinese buyers. Chinese nationals have historically purchased between 20,000 and 40,000 residential properties. In fact, over the year ending in September, almost U.S. $700 million in Chinese money entered the U.S. commercial property market, up from $600 million the previous year. As of 2019, China possessed 191,000 acres valued at $1.9 billion. This might not sound like a lot, but Chinese ownership of American agriculture has increased considerably in the previous decade. Indeed, in less than a decade, Chinese ownership of farmland in the United States has increased tenfold. And the reason is, China is a nation of savers, and real estate is where most of the country's cash is stashed. Now, the things won't end here. China has also penetrated in the U.S. film industry, or let's say China is buying Hollywood now. The People's Republic of China began exploring for ways to break into the American film market in 2012. China has specifically aimed to get control of American film distribution. Legendary Entertainment was purchased by Dalian Wanda, a Chinese media company, in 2016. But there are a number of outstanding concerns between the United States and China in terms of bilateral trade, as the tensions between the United States and China have risen dramatically in the last 3 years, thanks to former President Donald Trump's policies. The Trump administration took a variety of moves against China during this time, including tightening export regulations, improving investment screening, and attacking Chinese technology companies. However, an agreement was signed by President Trump and Chinese Vice Premier Liu He in 2020, and it marked as a turning point in the nearly 2-year trade war between the world's two largest economies. Moreover, Joe Biden's strategy of dealing with China from a position of strength through forging allies appeared to be working for some time. However, currently, there appears to be some tension among U.S. and China due to the war between Ukraine and Russia. In a phone call with Xi, Biden threatens consequences if China continues to supply material help. So, what would happen if U.S. decouples from China? Or what if China and U.S. stop trading? According to research, if the White House pursues a severe separation with China, the U.S. economy might lose more than $1 trillion in production and long-term global competitiveness. According to research released in September 2019 by Moody's Analytics, the tension between China and the United States has already cost the U.S. economy approximately 300,000 jobs and 0.3% of real GDP. Today, the U.S. China trade connection supports around 2.6 million employments in the U.S. across a variety of industries, including those generated in America by Chinese enterprises. And as the Chinese middle class continues to grow rapidly over the next decade, as it is estimated that by 2026, the number of Chinese middle-class consumers will outnumber the entire population of the United States, the U.S. businesses will have significant opportunities to tap into a new and lucrative customer base, boosting employment and economic growth. Hence, The economic data reveals that severing commercial links with China is actually a step backwards. In fact, according to a study, sweeping broad U.S. policies aimed at China would have an impact on other nations, prompting them to reassess their relations with the U.S. So, if the United States stopped buying things from China, the entire global economy would collapse overnight. Raw materials could be saved by reducing the number of products created in China. The upshot of such an event will be a commodities market crash, which may cause all financial markets to crash, plunging the globe into a virtually unrecoverable global financial crisis. So, while it is not certain that the United States and China will continue at the forefront of trade and development eternally, the balance of interest on both sides will likely control hostile impulses, putting the relationship in a state of hardening competition that coexists with the mutual understanding that both sides will be impacted, for better or worse, by their ability to address common challenges. If you found this video informative and enjoyed the content, make sure to subscribe to our channel and hit the like button as well. And if you have any questions, feel free to ask us. We will be happy to answer them for you. Thank you for watching.